What's going on, everybody? Welcome back to another video here. We have a lot to discuss in this one. We have some very important comments from Tom Lee as it relates to the broad market in this very interesting new initiative of $1.5 trillion being invested into US businesses here. We're also going to be talking a little bit about the broad market here, especially after the volatility that we saw on Friday after some new trade war developments started to heat up. Now, in addition, we're also going to be talking about a couple of your favorite names here as well: Nio, Palantir, Sofi, and HIMS, giving you guys an update on some of the most relevant pieces of news, as well as the charts here in the short term to give you guys a better understanding of what to expect next. Now, before we get into all of that information, guys, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot, spreading this information out to as many people who actually want to learn. And I've got a little something to talk about here before we get into the rest of this video here. At this point, I am one of, if not the most censored person right now in trading and finance. That's why you guys are seeing this video now on Rumble. For those of you guys that are watching this video on YouTube, YouTube tried to have my channel banned this past weekend here. I'm having problems with Instagram now, and you might be asking yourself the question, why is that happening? And the reason for that is that I have just continued to hand out results in the LTMP group like you guys are seeing out on the screen right now. Now, I told you guys that we were doing something with the LTMP group that the trading and investing community had literally never seen before. Did you guys think I was kidding? After the last 5 10x trades, 10 10x trades, 15, 20, 25, and now 30 10x plus trades that I have handed out to the group over the last couple of months here, are you convinced yet that this is the way that you should be operating in the market? Guys, nobody else out there right now is really generating the results that you guys are seeing me generate for everybody in the group right now. And they're also not dealing with these social media platforms trying to really censor their voice here, when all I am trying to do is show you guys what is actually possible in the market if you operate the right way. So for those of you guys that are interested in joining us in there, I mean, I'm not going to stop handing out the best trades in the market. Make sure you guys check out that link down below. Use code October, join the LTMP group, and get 50% off your first month. But without further ado, guys, let's roll this Tom Lee clip and start getting right into it.
You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic.
So even after all the craziness that we witnessed on Friday with the new developments with this trade war between the US and China, Tom Lee is still very, very bullish on US markets here and think investors should really be kind of excited over the next couple of quarters here as the US really starts to get going again. Now, one of the main things that Tom Lee started pointing out in that clip there was JP Morgan launches $1.5 trillion security and resiliency initiative to boost critical industries. JP Morgan Chase today announced the Security and Resiliency Initiative, a $1.5 trillion 10-year plan to facilitate, finance, and invest in industries critical to national economic security and resiliency. As a part of this new initiative, JP Morgan will make direct equity and venture capital investments of up to $10 billion to help select companies primarily in the United States to enhance their growth, spur innovation, and accelerate strategic manufacturing. Some of the different sectors that they're going to be operating in: supply chain and advanced manufacturing, defense and aerospace, energy independence and resilience here, frontier and strategic technologies, including AI, cybersecurity, and quantum computing here. So seeing that JP Morgan, even in this market environment here, is willing to outlay over the next 10 years this level of capital should be, and in Tom Lee's view as well, a very, very strong sign for US investors moving forward here, because if the US is able to win in a lot of these battles, they're going to be able to continue to hold their kind of number one spot. in the global marketplace here, there's been that concept and something that we've talked about a lot, that concept of TINA, in which there has been no alternative. Now, obviously, a lot of these foreign markets had been outperforming US markets significantly in the beginning of this year, with a lot of the tariff nonsense happening here across the board. But again, when you really think about it, there isn't really anything that is going to replace a lot of these US businesses at this current time. Now, another thing that I want to talk about with you guys before we start getting into a couple of these individual names here is kind of what's been developing over the market over the last few days, especially as it relates to this new trade war kind of developments with China here. So Trump's meeting with Xi appears to be back on as US softens tone with China after tariff threat. One of the main things that came out on Friday is that after China came out with their initial announcement kind of increasing some of their trade protections here, that the US was no longer going to be meeting with China, and Donald Trump came out and said that that was not going to be the case. And we also see this reiterated by Besson. He says that the US is in talks with China to prevent a new trade war. Now, when we come over here and look at the daily chart of the S&P 500 futures here, when we see what happened on Friday, this is a very, very significant move to the downside, caught a lot of people off guard, especially in the crypto space. Now, what I want you guys to keep in mind, if you take away anything from this video, is that there is a very significant difference between how amateurs will operate in the market and how experienced market participants or professionals will operate in the market. When you see instances like this, where there are significant shocks added to the market, what the amateurs will do is start running into the market and taking action. And what you need to make sure that you are doing is that in those scenarios, the smartest thing to actually do is to take a step back, wait for the dust to settle, and get more clarity. A lot of people were again thinking the world was over, we were gonna go into another period like we saw back earlier this year. And look what we are seeing today out of the broad markets. S&P 500 futures up about 1.5% at the current time that I am recording this, and all of those people that had that knee-jerk reaction to go into the market, sell off a bunch of stocks, or even flip net short, are witnessing even more losses than they actually needed to. Again, guys, you never want to be in a rush to do anything in the market ever. Now, moving on, I do want to briefly touch on some of your guys' favorite individual names here as we kind of get later into this video, go over some of these charts here so you guys can get a better understanding of what to expect next. Now, with the overall market still being in a period of uncertainty with a lot of charts kind of behaving in a way that I like to call broken, they're going to be very headline driven over the next week here, guys. We are waiting for that dust to settle, and then obviously going to be going for those very high quality A+ setups that have been able to generate us those 29 to 30 10x plus trades over that last 2.5-3 month period here. So the first one that I want to talk about with you guys today is Nio. So obviously when you look at this chart on the daily time frame, that Friday candle looks very, very, very dangerous, but we are seeing Nio snap back to the upside today, up about 6.7% here. But when we take a look at Nio on the weekly time frame here, all we are seeing is that Nio is starting to consolidate in a little bit of a wider range as we start to get into the end of this year. Now, again, Nio is one that, again, I outlined for everybody in the LTMP group at $4.55. I don't really have a big position in this one. It's 4,000 shares at about $4.55. They are exactly at $4.55. And I want you guys to all start thinking about the market in a slightly different way. Because again, if you want to have different results than everybody else, you have to think and act differently than everybody else does. Just very logically there, if you were to act like everybody else, you would expect to have the same results as everybody else. So with Nio and a lot of these other different investments, you want to make sure that you're being thesis driven. We talked about this a lot in my most recent YouTube video here, but again, the thesis really on Nio isn't really what the chart's going to do in the short term here, even though, again, I'm going to highlight when Nio is looking like it's about to make massive moves, which is where one of those big 10x trades did come from, as you guys can see back down in here. But the whole thing with Nio right now, it really comes down to whether or not they're going to be able to deliver on the promises that they have outlined to shareholders over the last few years. They have done a lot of overpromising and under-delivering, and they need to make sure that they're able to really follow through on a lot of those promises that they've made to their shareholders here in hitting a lot of those profitability metrics. Now, with the rollout of the Onvo and Firefly sub-brand there, they are doing everything that they need to in the short term in order to hit those goals. Now, we also have some other interesting news with Nio as well. Today, it came out that Nio partners with Alibaba's mapping app in China here, which, again, Alibaba-backed AMAP was founded 2 decades ago and provides digital maps, navigation services, and real-time traffic information across China. Known in the business ride-app hailing service allows Nio employees to use AI route planning in corporate travel here. So again, well, this is not anything that's going to make or break Nio. This is definitely going to be viewed by the market as a positive development. Now, the next one, Palantir over here. So for those of you guys on Rumble, not sure how you guys feel about this company here. I mean, this was one that I gave out to everybody at $15 a share. It's honestly been one of the best performing names that I've handed out over the last few years here. Again, Palantir in the 15s, Robinhood in the teens, also at 30, SoFi at 655, which we are going to talk about, Philip Morris at 95, RKT at like $11, $10 here. There's been a lot of really, really awesome names that I've outlined for everybody, so congratulations to all of you guys that have been following along. But Palantir, again, kind of business as usual here. This is not a name that you want to go out and start buying aggressively, but it's also not one that you want to go out and short. Again, they are commanding a very, very aggressive valuation in the marketplace right now. And I do think that there is going to come a time in the near future that the market is going to start holding this one to a higher standard here, even though they are doing everything that they need to in order to grow their government contracting side and their commercial revenue side, which, again, those investments from JP Morgan could actually end up helping companies like Palantir, especially if we do see a big focus of that $1.5 trillion going into AI here. But again, this has been such a strong name for retail investors over the last few years here. There really isn't much to do with your position at this point. If you want to trim, by all means. If you want to keep holding your position, by all means. If you want to create a little bit of a dividend for yourself by selling some further out covered calls, you can do that as well. There really isn't a bad decision at this point that you could do with Palantir. Then looking over here at SoFi, again, this is another name that we have had a lot of success with over the last few years here. SoFi at 655 was that initial outline for you guys, not July 2025, but around, I believe it was July 2024. Really, really strong performer for us. Again, I also handed this one out for free on X at $13.60 on that weekly breakout there. So you are currently still sitting almost up double on your investment here if you guys were paying attention to those announcements. But again, this is what I mean when I talk about a little bit of a broken chart, like what we were discussing earlier in this video here. We see a very, very aggressive candle last Friday, even after SoFi was looking to put in a very, very solid bullish short-term setup here. But again, when you think about what's actually driving the markets, it's always going to be the news and the big macro conditions that the market is always going to be focused in on first. So for me, I don't plan on doing anything with my SoFi position at any time in the near future here. I don't plan on buying more. I don't plan on selling any. I'm still waiting for this overall thesis here to play out and for SoFi to continue gaining market share, growing their revenues, and growing their user base here. So the last one that I want to discuss with you guys here too, another one that a lot of people have had a lot of success with, including ourselves in the LTMP group, is HIMS. So again, the last couple of times that I outlined HIMS for you guys was down at this $30 to $31 area. A lot of people were asking me whether or not it was a smart idea to buy HIMS after this big run up here. And again, guys, it goes back to my favorite saying, pay attention or pay a premium. If you had paid attention to everything I was saying about HIMS down in these levels here, you would be sitting up very, very nicely on your investment. But if not, you're going to pay a premium at those much higher levels. Recently, we did see a very strong bounce off of the 200 EMA here on HIMS. This was actually the last day that I was outlining as a solid kind of point here that you could start dipping your toe back into HIMS. The reason for that is you had a very strong level of support down here. And we had also recently seen HIMS bounce a couple of times and respect really well this 200 exponential moving average here, really over the last year. Now, obviously, that wasn't the spot to go crazy because this chart was looking pretty bearish still here in the short term, but those purchases, again, dipping your toe back in at those levels, again, ended up being very fruitful with him still grinding to the upside here. Now, taking a look at this chart on the weekly time frame, you are starting to get a little bit of a setup here, albeit not the best one, but seeing hims on this larger time frame being able to hold the daily 10 exponential or the weekly 10 exponential moving average and continue consolidating in this range. Again, if all the market conditions remain positive and we start to get out of this period of volatility here, we easily could see hims back at those recent highs in the 70s or even further if some positive news comes out, and also if they are able to knock their earnings out of the park, which they have done very many times in the past. So, guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. Again, if you're not subscribed yet, make sure you guys are. Follow me on Rumble. Follow me on YouTube here, Twitter, Instagram. Well, maybe not Instagram because they don't want to let me post right now. But guys, I'm going to continue handing out the best setups and the best trades in the market to everybody in LTMP. For those of you guys that are making the right decision to hop in there with us and really kind of take control of everything that the market has to offer, very, very excited for you guys to become the next success story. But until next time, guys, I will see you. Peace.